Sum of minimum money to invest, what would you recommend? I would recommend that you pay off all your debts first. Maybe not necessarily a housing debt, but um, I think a lot of people are keen to invest and also try to look for a specific stock to get them rich quick overnight. And I think that personally for me, um, you could potentially do that if that's kind of what you're looking for. But um, I think personally, and it goes a little bit about what I was mentioning a little bit earlier. If you understand what your time horizon is and you understand what your risk tolerance is, you can make a better understanding as to how you want to invest. And then I kind of went on a divergent there because I was answering questions and talking aloud. But the third part of that, aside from time horizon, what your risk tolerance is the third part is exactly how active you want to invest. If you want to be extremely active in the market, and 3 and 4 kind of go together, and you might actually combine them if you want. But if you want to be very active in the market, you want to seek things out every day. Doesn't necessarily have to be specifically to the stock market, but could also be related to real estate as well. If you also want to put sweat equity into your portfolio, that's also okay. Nothing wrong with that. I'm personally just lazy, so I'm more lean to the side of doing things more passively, investing in stocks, which I invest in once, maybe monitor every once in a while and see if they're still doing what I want to do. But there's people that like to do real estate investing, and that could also be passive as well, but it costs you a little bit of money. But if you want to do active investing in real estate, things like flipping houses, what have you, you're going to have to manage contractors and what have you, and that gets a little bit labor intensive. So not saying that that's bad. It's definitely not a bad way to do it, and you can actually make a lot of money doing that because you're not only putting in the capital, but you're also putting in the sweat equity as well, which obviously, if you do things correctly, your sweat equity is going to help with increasing your investment as well. But that also depends on how lazy you want to be. Maybe you really like your 9-to-5 job and you want to take the money that you're making from there and put it in something very passive and worry very little about it and just have the peace of mind that it's going to a pie, whether that's a 401k, 403b. That's understandable. If it's a Roth IRA or traditional IRA, that's understandable as well. Put it in that. And then if you want to get extremely, extremely passive, ETFs are a good way to do that as well. So I think there's two spectrums. There's being extremely active, and you can do that with stocks as well, and not just real estate. And then there's the extremely passive, and you can do that with real estate as well. Very passive, invest in certain funds and what have you. But I think with that, it kind of goes into 4, and like I said, you can kind of number 4 of what I suggest, and I think that you can almost combine these two. But how often do you plan to buy and sell your holdings? Do you want to day trade them? Do you want to swing trade them? Do you want to buy something quick, get out of it in the next month or so? And I think this also plays an important part with how active or passive you want to be. If you just want to buy something and never sell it, ETFs and buying individual stocks and long-term real estate is probably something for you. But like I said, I think that is how you can kind of start to formulate what your personal strategy is. And so not saying that being passive or active or having a short time horizon or long time horizon, one being better than the other, I think it's just something that you need to ask yourself. So that way you can formulate your own opinions about what works for you. And you might answer that question and, get into your journey and not think that it's right for you. You might make a wrong step or go down the wrong path and not have a good gut feeling about it. But as long as you're not flip-flopping between different strategies and you kind of understand where you're getting in, where you want to get out, if get out at all is your plan, then I feel like you're going to be more motivated. You're going to feel better about what you're doing, and if you're feeling better about what you're doing, it's probably going to end up being better for you and your investing goals in the long run. And then number 5, I was also talking about I forget what exactly and how I worded it, but I think it's very important you understand what you want to do with your investments. Do you want to live off of them? Do you want them to buy a house? Do you want them to and I think that this is almost like the second most important part of it, other than your time horizon. What exactly do you want to do with your money? Is it that you're investing? Is it to live off the dividends? Is it to live off the cash flow? Is it to purchase other things like vacations? And if you help understand that, so you know your time horizon, you know exactly what you're going to use the money for. You know how risky you want to be with the money. You know how passive or active you want to be. You can really start to understand how you can shape your investing strategy.